Hi everyone, my name's Carson. I'm the Chief Investment Officer at Quick Brown Fox Asset Management and the Portfolio Manager for the TAMIM Australian Equity All Cap Value IMA. During reporting season, we thought we'd bring you some of our thoughts at the end of each day to let you know what's catching our eye in terms of the companies that have reported. So today we had really the first big day of reporting season. A number of large caps were out and a number of small caps out as well. On the large cap front, the standout for the day really was JB Hi-Fi. JB Hi-Fi reported a very strong result ahead of market expectations and well up on last year. One of the key things for the company was they managed to grow same-store sales by 8.4% during the period. This was helped by the closure of Dick Smith stores. The real key going forward though for the company is going to be the integration of the Good Guys acquisition, which completed in October. It's only been in the company for a few months and they haven't really integrated the store network with their own yet. That'll occur over the next year. Further rollouts will be the key to success for the JB Hi-Fi share price. Looking at the other large caps reporting today, we had Amcor, Ansell and Bendigo Bank. Amcor and Ansell were interesting as they both showed diverging trends within developed markets and emerging markets. Amcor saw very strong sales and very strong profit growth within North America, but a weak experience in the emerging markets, particularly Venezuela. Ansell, on the other hand, saw strong growth in the emerging markets, which is a smaller part of their business, but weak growth within the developed markets. Within the developed markets, Ansell did see volume increases. The interesting thing is they saw price declines for some of their products. This is an indicator of increased competition and a bit of a concern for shareholders. Moving on to Bendigo Bank, and this was probably the disappointment of the day, and it was disappointed on capital grounds. Tier 1 capital fell below 8%. One of the key drivers here is after a few years of benign growth within their asset book, the last 6 months have seen significant growth, both through the Keystart acquisition in Western Australia and through organic means. This growth in assets hasn't been matched by growth in capital, hence the capital levels have fallen. This has given the market a little bit of a shock. Moving on, looking at the small cap results out today, the standout was DWS in the IT services space. They saw a strong result on the back of increased staff utilisation. In addition, the company over the recent years has actually lent on the balance sheet. They had a net cash balance sheet going back 18 months and have made a number of acquisitions to boost earnings. So things are going quite well for them right now and the business seems to be performing well. Elsewhere, we saw a few profit warnings from small cap companies due to report later in the month. We saw Prophecy, Beyond International and Zycom Group all put out disappointing trading upgrades. They'll all report towards the end of the month, but their share prices are down today on the back of what can only be described as weak operating conditions. So the divergence within small cap companies from those performing well to those disappointing remains. Difficult market environment and stock selection is critical at this point in time.